In the 1989 classic, Back to the Future Part 2, Biff steals Doc's time machine car and goes back to 1955, where he gives his younger self a sports almanac. Knowing all the scores of all future games, Biff becomes incredibly rich. Well, ladies and gentlemen, the script for Back to the Future 2021 edition has been written. All Biff from 2071 has to do is tell his 2021 self to sell everything he owns, open a Robinhood account, leverage his $10,000 savings out the nose, 100 times or so should do the trick, and put everything on GameStop stock on January 12th, 2021 at $20 per share. 16 days later, GME stock crosses $450 and his $10,000 leveraged investment will be worth $24 million. Biff can then sell his shares, pay some hefty short-term gains tax, and proceed to take over the entire town just like in the original movie. If you do not have a time machine, well, then you're stuck trying to figure out what the future holds. You're probably wondering whether now is a good time to take your profits. And if you don't own GME stock, you've probably heard all about it at this point and are wondering whether you should get in on the mania. Well, we don't have a time machine to the future, but we do have a time machine from the past. So let's go back and see what stocks with high short interest like GME, AMC, Tilroy have done since 1987. That may offer you some clues with what you should be doing right now. But first, let's do a quick review of what happened with GME stock. If you don't already know, or you're watching this video years from now, GME is an example of a good old-fashioned short squeeze. If you don't know what a short squeeze is, let's take 1 minute to explain. Shorting a stock is basically the exact opposite of buying a stock. When you buy a stock or go long and it goes up in price, you make money. When you short a stock and it goes up in price, you lose money. The problem with shorting a stock is twofold. If you buy a stock, the worst thing that can happen is that it goes to zero. That's bad, but you can only lose your initial investment. One problem with short selling is that there's no limit to what you can lose. If you spend $100,000 shorting a stock and it goes up 100%, you lose 100% or $100,000. If the stock doubles, then you lose $200,000. If the stock goes up as much as GME went up, you lose $1.7 million. Another problem is that short sellers borrow money to short their stocks. And when they lose enough money, the banks start calling and demanding that they get out of their positions. And in this case, getting out of their negative or short position requires the opposite. So a positive position, they have to then buy the stock to cover their short. And when that happens at a grand scale, you get a short squeeze. Everyone that was short the stock now has to buy the stock, which drives the stock up even more. And then that forces even more short sellers to buy the stock, which drives it up again. And then it becomes a full-on mad dash with everyone trying to cover their shorts, i.e. buy the stock. And when this happens, shorting a stock can become a literal financial black hole. In the month of January alone, short sellers lost a total of $19.75 billion. And all this carnage was caused by a bunch of rogue Robinhood traders on a subreddit called WallStreetBets. They saw that there was an opportunity to essentially manufacture a short squeeze. So they coordinated their efforts in a giant mob and started buying GME stock, which pushed the price up. As more people bought, the price went up, which caused more short sellers to have to buy to cover their shorts, which caused the price to go up even more, and repeat. And that's why we had this. On January 1st, 2021, GME had the highest percentage short sold of any stock in the US stock market. Nearly 140% of the shares outstanding were sold short. That's right, more shares were short than even existed. How that happens is a topic for another day, but the point is that GME was a very popular bet on the opposite side. The people are betting against it in historic measures. So if you just look at the January results alone, it is obvious that buying stocks with high short interest must be a good idea, right? Just find the list of top shorted stocks and buy every name on the top of the list. For reference, these are the top shorted stocks as of January 29th, 2021. You can see that GME is still at the top of the list at over 120%. So should you buy these stocks, or is being on this list a bad thing for future returns? To find out, we're going to take a look at short interest back to 1987 to see if the data gives us any clues what to do with the stocks on this list. To construct the study, I looked at monthly data going back to 1987. Every stock in the S&P 500 index was ranked by highest short interest relative to average daily volume. So the most shorted stock, like GME, would be ranked number 1 and would get put into bucket number 1. The least shorted stock would be number 500 and put into bucket number 10, with the other buckets all in between. So let's say you would have made 10 portfolios out of these lists each month starting in 1987 all the way to 2021. Let's say you held on to each one of these buckets for the next 12 months. How would those buckets have done? The first bucket, the one with the highly shorted stocks, would have produced an average return of 8.38% per year. The last bucket, the ones filled with the low short interest stocks, would have generated 18.77% per year on average. So the long-term evidence is clear: short money is smart money. And intuitively, this makes sense. Short sellers tend to be large investors with tons of research firepower. When they short a stock, they are taking a lot of risk in doing it. That means they do a ton of research beforehand, and in most, but not all cases, they are correct. So, in summary, looking at a short interest metric is a useful indicator for investors. If you're considering buying a stock, first, check to see how much of the shares outstanding are being shorted. If you see a big number, you should think twice before buying. There's a lot of smart money betting against it. As for GME, if Biff were to have bought it on January 12th, 2021, my prediction is that his future self from 2071 would have told him to sell it on January 28th at $458 per share. You should do your own research before buying or selling any security, but my prediction is that the stock trades for less than $50 by year-end 2021. For more data-driven investing videos, subscribe to my channel.